know if this is a today gamma level. I would think with the market maker move, it shouldn't be really reachable today. But, we have CPI data tomorrow. And I think that also opens up the potential, the highs and lows are widened based on CPI news. It's going to be, for the first time in weeks, we're finally getting some data, right? So let's go to SPX, take a look at the plus minus. The IV rank can't be correct. Let's go plus minus. So I'm showing a plus minus right here, about 40 points going into today, 63 points from now until Friday. That's pretty wide. That's pretty wide. And then going into up to 80 points by Monday. So today, 40 points, again, a little bit higher on the plus minus side. And let's see what we get. So obviously when we have opening bell, we're going to open a little bit softer than the close. 66.99 was the close yesterday. So we open up a little bit softer. And let's see where we can look at our deltas. I will probably do something similar to what I did yesterday, which is find the levels I like and put in the credit that I want. And then if price fills, we have a good chance of making some profit. Okay. Bodine says, yesterday shows why you take position off for partial profit if you held out for more. Yep, very true. That's why when you get into manage these trades, it's like if you want the higher win rate, it is better to manage a portion of your profit. I mean, when the trade filled for us yesterday morning, it really, wasn't some like amazing pop, but by the time we got filled, it would have been right around 11 o'clock, right? 10:45 or so is when we got filled on the trade. So we're getting filled here on daily profit play. And that little response to the upside gave us a 60% profit on the credit that we pulled in. So I pulled in $1, closed out for a 40-cent debit, and that trade was over in like 15 or 20 minutes. Now, that's not what I'm accustomed to. I'm just saying, like, we followed our plan. We got filled at the levels that we wanted, and we were fortunate that prices responded. If we waited longer, right, you've got some profit there, you didn't take it. You got some profit there, you didn't take it. Then all of a sudden, price is way underneath your levels. And I mean, our prices yesterday, let me look at Telegram here. We had a put side of 66.80. Okay, put side of 66.80. We flirted with 60. We flirted with 56. So you're upside down by 30 points, and you're like, oh crap, this is going to be a losing day. And then it came all the way back to 66.99. So at the end of the day, there's moral of the story is this: if you have profit, and mechanically, this is what I keep using for daily profit play. If we're up 20, 25, 30% of our credit, take it, because your win rate would be very, very high. If you want to hold out for bigger profits, that's why the size and spread, the width of your spread is so important, because at the end of the day, you're still positive. And it could have been a full winner, but your win rate will go way down. If you try to take your trades and hold them all the way to expiration for a 0 day, you're probably only going to win, 55 to 60% of your trades, which isn't terrible, but you're also still making a trade that is higher risk and lower reward. Because even if I got filled for $1, risking $4, and I won that $1, if I lose, I've got to have 4 full winners to make up for that loss. And my win rate goes dramatically down from 90% to probably 60, 65%. So that's a big difference, right? So if it was flipped where my reward was bigger than my risk, then I don't mind winning 60%. But when it's backwards, I want to win as high as possible. I think that's why I'm sticking to whatever helps me win 90+% daily profit play, especially. That's what I want to do. Okay, so let's go back to the close, 66.99. Take a look at our VIX box. Get a plan for today, 66.99 right there. Volatility index up to 1906. That's going to push us up closer to like 1.2%. 19.106 divided by 16 is about 1.19. Let's round up to 1.2. Okay, 1.2% puts us right around the 100% ATR is 67.79. And this one puts us to about 66.20 or so. Okay. So on the good side, I mean, is it possible that we go to 67.75 today? Well, that would be hitting the VIX box high. I wouldn't mind taking a sell trade up here. Could we get like a 75 by 80 or 80 by 85, stay out of the way? My VIX box here is looking to top out around 67.77. So I don't really want to sell a 67.75. If it's going to get there and stay there, let's get a 80, 85, 85 or 90. Let's see if we get a little bit higher today. That would be quite a stretch, especially if we start from a gap lower, a slight gap lower. ES is down about 0.09. So a slight gap lower. Are we going to push 1.3% to the upside today? I have no idea, but I would like to sell as high as possible. That is for sure. So I'll put in most likely, and this is going to be a very low delta trade. I know that. I mean, we're so far out of the money here with the plus or minus 40. I'm going up 75 or 80 points. So my delta is going to be like 2, which means I'm not going to get filled for the dollar that I want, but I will sit it there and pen it, or I can just choose bear call spreads and bull put spreads. And if they get filled, I think they're high probability trades. Okay. Which means there's a lot of wiggle room for price action in the middle. Now, the trade in the middle, maybe if we have such a wide open space for today, a reverse iron condor might be a good trade for Thursday, right? If I can get like $6 or better, VIX is at 19. It's going to depend on how it prices. And I haven't taken one of these in a minute just because the fills have been like, 580, 575, 565. I don't want to take that trade. That would be like accepting like 50 to 60 cents on a $5 wide iron condor, which I don't, right? So I want at least like $6 credit on an inverse iron condor. So it depends on what I have to do, plus or minus wise. So we can price it out, but most likely I'm going to stick to get my bear call spreads up here, get my bull put spreads down here, and see if those levels ultimately stay safe for the day. Okay. Do we have any big pin levels on the day? Let's find out. Maybe we can go. Oops, I need to open up my app. Maybe we can consider some double up like we did, where I got that lucky pin at 67.35 to close on. That was Tuesday, right? Yeah, that closed on Tuesday. That helped out. That was a nice little payout. Typically for the reverse iron condor, how wide of a move you're looking for? Well, if I'm doing the reverse, I don't want my dead zone to be more than like 20 to 25 points. That's usually on the high end. I don't like to go much higher than that. I mean, the plus minus on the day is 40. So if I'm doing a dead zone of 20 or 25, it's like I need price to move. It's that simple. Like I want price to go 60 points up or 40, 50, 60 points down. I want any type of direction, right? Because all I need to do is stay out of the dead zone. Again, same thing with all these trades I take in a zero day. I rarely hold them to expiration. If I have a reverse iron condor that I can put in here, which I have credit if we go up, my dead zone, credit if it goes down. So this would be if price goes down, price goes up. Here's my risk, right? So let's say I get filled for $6. Well, I have a $4 risk down here. I have a $1 bonus up here and up here. So if price goes down or goes up, it gets out of this dead zone, I can make some money. By the afternoon, if it's 12 p.m., 1 p.m. in the afternoon, and we're up above the dead zone or below the dead zone, I'm usually taking partial profit. So if I get filled for a $6 credit, I'm usually taking the trade at like a 550 debit or lower. Okay, the most I can make on this trade is $5. So 6 minus 5 is I can make $1 profit on that trade, which is like making a full profit. But if I'm offered 50 cents or 60 cents or 70 cents on that max dollar, I'm going to take that to protect it to have a higher win rate. Because like yesterday, even though it was down all day, the market came back in and it may have finished inside the dead zone. And you obviously don't want to be there because that is your loss. And by the end of the day, that's a full loss. So we don't want to be in the dead zone. But usually 20, 25 points is the most I'm going to go. Okay. Unless our VIX was really, really high. If we had the VIX at like 25 or 30, then we can probably go 30 or 40 wide and the market's going to swing, 70, 80, 90 points one way or the other. But right now we're looking at maybe a plus or minus, 35 to 40. So I think getting like a 20-point dead zone is probably about as wide as I want to go right now. All right, let me go to SPX, make sure I'm in ultra short term. I am. Okay. And float this out here. So here's pre-market. So we're opening a little bit lower. This shows a positive negative gamma at 66.90 versus my Tanuki trade has a 67.05. So that does make things a little bit more interesting now where price, has to be. There also could be adjustment within the first 15 minutes. You know, we may have finished yesterday in negative gamma, but I'm curious by 9:30 a.m., 9:45 a.m. Where does this update? This might shift positive. This might be another level, but that's a pretty big level at 67.75, and that's all I have. So it's either we spend our day slightly softer buying this dip. We gap filled here from Monday's open. So is this just more melt up, and this is the largest gamma level that's going to pull? This is an all-time high. If we hit 67.75, that's an all-time high. Plus, we have CPI data tomorrow. Okay. New guy says got pumped on those magic butterflies you taught, missed by 58 cents. Pretty exciting right now. Last few seconds worth. Yeah. Yeah, but I mean, butterflies are amazing. I mean, the session we had yesterday, right? The butterfly spread, the iron butterfly spread, the broken wing. I do use those quite a bit. They are, look, they're all or nothing, right? But the nice part is if I put on a butterfly spread, so let's say that let's just use like a vertical axis. If this is the live price, okay, and I put in a butterfly spread up here, or I put in a butterfly spread down here. The nice part is the reality of these trades is if price goes up, this shows some profit a lot further left and a lot further right than the actual butterfly at the end of the day. So if you're willing to manage partial profit, what's nice is you can still get like a 50% return on your risk, maybe even 100+% return on your risk early in the day. And if price goes down, same thing. You have like a much wider left and right side. You're not going to get the profit trap until the end of the day, but you get a wider left and right side of the trade. So like I said, if you're managing partial profit, they work really, really well. Why do I do a lot of butterflies and iron butterflies, broken wings in a 0 to 1 day? Because it's the actual trade, and this is where all the magic happens, is like the final minutes of the day. So during the day you have like the wider left and right, and as it gets nearer to expiration, you have that potential profit trap, which most of the time I'm setting it up for like 5 to 1 or 9 to 1 or 10 to 1. They can be ridiculous sometimes how much profit you could get. But the nice part is I rarely get profit traps. Okay. They're awesome when they happen because it pays so much money. But if I can just flip, and I've done this a lot for double ups, I can lose one trade for 100%, right? If I put in a debit for 40 cents and I lose, and then this one, I win 225%. Well, I lost my 40 on this trade. I might make $1.50. I'm net positive on the day after a loss. That's all I'm doing is if you want to cast a net out there and look for a net positive trade. If you're going to trade, multiple butterflies, especially, I mean, I try not to do more than 2 or 3. If I'm doing 2 or 3, what am I doing? I'm trying to pin something in the middle. I'm trying to pin something at the top or pin something at the bottom. And obviously it's about risk management and profit management, because at the end of the day, I'm trying to get a net winner, right? So there's all sorts of ways to do it. It is a lot of trading, it is a lot of management. When you're doing 0 and 1 day trading, you don't spend a lot of time away from the computer. Rarely do I'm like, yeah, I'll just set it there and I'll just press. I mean, I'm watching this stuff all day until the close, right? Yeah. So, and if you go, and remember, if you go wide enough, if you go wide enough, I mean, the goal of a butterfly is like you want them to be cheap enough that the risk is manageable. You go wide enough that your net is large enough, maybe even overlaps. I mean, it's very possible if I was to, let's say this is all hypothetical here. Let's just build something out. Let's say that we open up with a, right now, since we have, plus or minuses at, 40 points or so, we could probably build like a, 15 wide butterfly trap here, and then another, maybe a 15 wide butterfly trap here, and another 15 or 20 wide butterfly trap here. I mean, unless the market's going to have like an outlier day above or below this, I mean, casting a net 15 or 20 wide, 15, 20 wide, 15, 20 wide, if it's cheap enough, I would think the market's going to finish somewhere in that range for the day, right? So that's not a bad plan. It's a lot of trades. It's a lot of price to manage. And it's also, if you want the most profit at the end of the day, you're going to be managing this like literally at the close. 3:30 p.m. Eastern time, 3:40 p.m. Eastern time. If you're in your profit trap, that's where you get the most credit. Close, and obviously cash settles, and the ideal pin price is going to be right in the middle. So if I did a 15 or 20 wide net, right in the middle is my pin price. Right in the middle is my pin price. Right in the middle is my pin price. And if price is just a couple points off of that, that's okay. We're still in towards the peak of those profit traps. So again, there's a whole strategy around it. Question is how aggressive and how much do you want to have to manage the trade literally every day? So all sorts of ways to do it. Convert to vert, yeah. I've seen that stuff. Yeah, I mean, it's not bad. Like, again, if that's all you're going to do, it's a great strategy. So, but I will tell you this, like, what's great about butterflies? You don't have to win all your trades. You can still make a lot of money. Okay. But you have to be a trader that is also prepared to lose, let's say, 40% of your trades. You'll have a streak where you get no winners. And all of a sudden it feels like you're over trading and you're chasing and you're never getting your profit targets, or you're getting profit targets. It's not big enough to cover the 3 trades you put on there. So, there's everything, like there's nothing perfect. There's always a trade-off when you're putting a trade in. That's what I think is one of the fairest thing about options is there's always a trade-off with like the pros and cons. You want high reward to risk, you're going to sacrifice probability, right? You want high probability, you're going to sacrifice some reward to risk. But somewhere in between there is an infinite amount of strategies you can deploy and try to do something that carves you out some profit. And if it works, keep doing it, right? If it works, keep doing it. Pretty slow may say all day. I mean, and those are good times to do it. I mean, if the market is really, really chill, those are great times to do it. Right. But it still works in a high volatility environment too. I mean, if you're going out of the money here, you could probably do a 10, 15, 20 wide butterfly and, stagger 3 of those, maybe be all in for the market for maybe $300 to $500 and have, up to $1,000 to $1,500 profit traps. So as long as one of them can catch enough profit to make it break even or better, it's totally worth it. Sometimes you might just mitigate some of the losses. I think one thing that's very good is you could absolutely take very small losses that way. So that is one of the appeals of trading butterfly spreads is it's never about risk management because risk is always very small. It's really about profit management, which kind of makes everything more fun. If your job is, look, I'm trying to manage my profit to the best of my ability. That's a very different way of trading because obviously what I spend most of my time doing is managing risk. So butterfly spread is mostly like, look, risk is contained. Risk is pretty easy. Yep. So anyway, all good. All right. Futures down. It's very flat. Actually, we got about 3 minutes. So we're right back to break even. We're going to be opening up probably right around 66.99. I'm going to be looking for a, bear call spread up here, bull put spread down here. Obviously, delta wise, it's going to be a lot tighter. I don't know why there's such a discrepancy here. Like 67.75 is a pretty big level. In order for me to be convinced that we're going to see that level, we have to go above into positive gamma. So if we get to positive gamma, then I could see prices floating higher, maybe taking out the highs for the week. Typically Thursdays and Fridays, the market's trying to make some highs. So do we have that type of day? So one thing I'll price out would be, do I have an inverse iron condor that I can put on? Do we get a directional push one way or the other today? If so, we can make some money there as long as the fill is good enough. I want to get $6. If I'm doing a 5 wide reverse iron condor, I want to do $6 or better credit. Okay. Hopefully that dead zone is no more than 20 points. And if we do get to these highs or do get to this gamma level, then that will pay pretty well. And then on the bear call side, I want to put my bear call spreads high enough that hopefully by the VIX measurements, we're not going to exceed my VIX box today. Okay. And, as tempting as it is to set it right here, I might go just a little bit higher because the VIX box is right around 67.77 or 67.78. So I'd probably set the, 80 or 85, probably 85 to be safe, like 85 by 90, 95 by 6,800, probably set it in here for bear call spreads. And then bull put spreads, probably down here at the lows. So we should see prices contained today within the 100% ATRs as far as the day goes. So going down to the 100% is a 80-point move. Going up to the 100% is a 80-point move. We've got a plus or minus 40 on the day. So by the time the dust settles, hopefully the market is within that 40-point range, and we can position accordingly. All right, 1 minute for the open. Ready? All right. So I'm going to look to go 80, 85. And it's way up here. I mean, I told you it's going to be a very low delta, right? So this is shifting right now. Here's a, 16, like this is the stuff I'm talking about. DLB. I feel like that's either a newsbreakers or pinch point. Newsbreakers. Let me check. I just had a fill on DLB. Let me check and see which one it is. DLB 250 debit got filled. Okay, pinch point is filled for a new trade. I'm going to update this for pinch point. Trade filled. Trade number 75, DLB. Filled for 250 debit. Okay, so 250 debit, I'm going to put in let's go 375. Setting a 3.75 credit for profit target. Okay, so that's filled. So I'll go DLB here, pinch, and set the take profit at a 375. What's a dollar out of this? Dollar. I'm going to go dollar instead. I'm going to go 3.50 credit. I'll take a 40% winner instead. Just easier profit target to hit, and that's a 40% return. Okay. Nice to do that. Set it and forget it. We open up a little bit higher. I mean, we've got a lot of levels here. I think today's going to be like kind of noisy. Honestly, we have so many call levels and put levels. I don't know. I mean, this stuff, it changes so fast intraday. Let me have a look. I think I'm just going to set the trade up like we did yesterday, put it at the parameters that I want, and get the fill that I want, and let the mechanics speak for themselves. Let the market makers do their job. Let's align ourselves with them. So we got a plus or minus 30 on the day. I'm going to go to, I mean, I kind of hate this trade, but if I do the 40 and 45, that's a 14 delta. 50 and 45. I mean, that's $1.25. Again, what I don't love about this is the current pricing skew in the market. We are way closer on the call side than we are the put side. Okay, if the market's going to move anywhere around the VIX levels, this trade is going to be threatened one way or the other. So I don't love that. I'm going to play it safe. I've been doing it all week. It's fine. We're positive on the week. I'm going to play it safe. I'm going to go way up here. I'm going to go 80 by 90 for a $2 credit. Okay, and I'm going to go 85 by 95 for a $2 credit. If you want to tighten it up, then go 5 wide. So you can go 80 by 85 for $1, and then go 90 by 95 for $1. Your call. But I'm going to go up above the 100% ATR, up above the VIX box high, and see if I can get filled for $2 credit. Okay. On the put side, I'll go a little bit tighter. I'm going to go 5 wide on the put side and put it again. We did get a little bit of a shift in the VIX box. Oh, that's interesting. Okay, VIX box adjusted. Maybe I think the ATR is adjusted, not the VIX box. VIX box is based on VIX value, so I think the ATR is adjusted slightly. All right, so we're at the VIX box high, and we're looking at a 66.20. I'm going to go 66.20. Let's see. Are we going to hit those lows? 66.20. I mean, that's gettable. The lows at 6,600. I'm going to tighten this up. So I'll go 66.20. Um, hmm. Just going to look left. So we have a lot of support here at 6,600. So 20 is the bottom of my VIX box. I'm going to give it a little bit more wiggle room and go 6,600. I'm being conservative right now, but I'm going to go 66 by 65.95 for $1 and 90 by 85 for $1. All right. And I want to price out a inverse iron condor as well. So if we go this way for an inverse, 67, 67.05, maybe a 20 by 15. Again, not offering nearly enough premium for this to go 20 wide dead zone, and I'm getting, 60, 70 cents. If it was showing over $6, I'd be kind of willing to take the trade. But it's probably not. So I'm not taking the fill. We have a lot of levels. 50% ATR is 67.38 to the upside. 67.38 to the upside. Our previous highs, 67.50 we hit this week, and 67.64 are the all-time highs right now. So I'm seeing positive gamma. Okay, I'm seeing positive gamma. If we are going to go directionally to the upside, I think maybe the simplest trade for today, if we want to get a bit directional, is, let me zoom in, is getting, kind of like an at the money bull put spread, looking to see if this will go into positive gamma and also drift higher. So let's see. If I did something at the money, so I get $2 to risk 3. I don't love that trade. I want more, right? If I go in the money, I'm getting 225 to get 270, risking 275 to make 225. That's what's kind of crazy. You can do like an at the money, even an in the money credit spread, and you're not getting, 250 to make 250, which is kind of crazy. Like that is showing like the built-in bias. It's like the market's kind of not going to reward you for being at the money. You've got to be in the money on these trades. So anyway, I mean, it's still fine. It's just, do you want to take partial profit? Right? We're in positive gamma. This is kind of a quiet look to my 0 DT levels, is there's not much here. So either, we make like a slow drift to the upside here. This one I can delete. So if I did a 10, so $1.90, can we take partial profit out of this if price goes up? But again, to do this and get right in the middle of the market, we've got to be willing to accept a $300 loss. And you're playing with, within the context of price can clearly move this way. But if price goes higher, this $1.90, $1.95 will push up in profit. Right? So if price goes higher, that $1.95 credit will trade for a $1.50 debit, $1.45 debit. Take your profit, move on. Okay. So VIX continues to go down a little bit. This is best read at like 10 a.m. I'm just going to hold off. I don't like getting my hands super dirty in the middle of all this noise. So I'm going to keep the trades in as is. I'll put these in for Telegram. The trades that I posted, these are pending orders. I'm putting in 2 bear call spreads, 2 bull put spreads for right now. So working orders, 2, 2, 1, 1. All right. Pending orders, 2 bull put spreads, 2 bear call spreads using VIX. So SPX 1023 expiration. That is a sell 6780 call, buy 6780, a 90 call. For $2 credit. Sell 6785 call, buy 6795 call for $2 credit. And then I'm going put side, 66. $65.90. Okay, pending. Trump speaks at 3 p.m. Okay. Let's see what's getting some love today. P&L's up a decent amount. That's a good sign. I'm curious where is this just like immediate heat map going up? Let's see where most of the gains are coming from today. So Tesla down slightly. Bitcoin making a run. China making a run. XOP for energy. We had a big 2-day, 3-day push on oil. MicroStrategy up. Silver up. It did get some dollar cost averaging levels. If you're in my project options edge, we did get filled on one of our levels. So we've been looking to dollar cost average into CEF, PHYS, SLV, and GLD. And some of those levels are starting to get filled. So I think PHYS got filled yesterday for a pullback. The other ones are close. So anyway, got some profit on the day, which is totally good. Probability of profit now 91% on my oil trade for project options edge. We need oil futures to stay above $50 by December. I think that's the case. Looking pretty good. This max profit's around 220. Futures, that's a hedge. That's a hedge. Russell, that's a hedge. This is kind of, if you're in, again, this is project options edge stuff, but Russell, I've got a hedge that's down $4,600. And then I have my IWM trade that is up $63,000. So, yeah, I can afford to take a hedge. You know, I'm sacrificing obviously some of that, but it is, you know, much needed in case the market was going to implode, because this risk of whatever this total risk is on the hedge still offered like a, I think 9-to-1 or 10-to-1. So even if I had lost, you know, I don't know, it might be more than that, but I mean, I don't want to give back $63,000 of profit, so I'm trying to offset as much of that as I can with a futures hedge. All right. Anyway, real time looking like we're back up at a positive gamma, and if there's any direction on the day, it could be drifting to the upside. Could be subtle, but enough to make some profit. So is anybody just doing a bull put spread at the money? Just curious. You can do whatever you want. I'm just putting my pending orders in. But right now, a 10 by 5, you get $1.85 or so. If price goes higher by 10, 15, 20 points, that usually directionally will get you some quick profit. Okay. What would I go after? You know, why is that a reasonably compelling trade? Well, we have a 50% ATR up here. We're not having to get all the way back to these highs. It would just be a slow reach to the upside. So, I mean, I could see that trade working out just fine. If you did something further out of the money, 66.90 or so, kind of the same type of thing. You get $1.30. I mean, again, you're risking 370 to make $1.30, but you're not going after full profit. You just want to see, okay, $1.30, can I grab 30, 40, 50 cents out of that and make money? You go a little bit tighter to price, you pull in some more premium. $1.45, you play more at the money. $1.65, you play at the money. $1.90. All you need is price to go higher and then close this out for a lesser debit. And just directionally, we're already up about 15 points in the morning. Well, looks like 67.38 can be hit. I mean, it's pretty open space here. Shoot. That would have been, I mean, I don't know. I could have, should have, but I'm not in. If anybody's in with a bull put spread, should be looking pretty good. That $1.90 is now trading for $1.65. That $1.65 trading for $1.45. That $1.30 is trading for $1.20. So it doesn't take much. Get some direction, get some love. But that'd be a quick profit on the morning. Pete throwing some tasty trade philosophy out there. So are you doing an at the money butterfly then? Is that an at the money iron butterfly? Oh, at the money put spread. Okay. 10 wide put spread. Gotcha. What did you at least get 1/3 of the credit? Like 1/3 of the width? That's one thing I'm really particular about is if I'm going to go 5 wide, I'd like 1/3 of the width. So if you're doing 10 wide, did you get at least $3? So there you go. Okay. So 355. Good. Yeah, it's good, man. It's cool. Little tasty trade. Yeah, they've done all sorts of zero DTs. The put spreads, the iron butterflies, the iron condors. They love their strangles. But strangles aren't really the best for zero DT. Strangles are better out, 45 days. That's their textbook mechanics are, 45-day strangles. With the flexibility to make an adjustment, always manage things at the halfway point. So if you're out 45 days, manage it at 21, reduce volatility. It works. It's 30 plus years. Option sellers make money. All right. So I'm just going to hang out and see what looks good for the day. Is it possible to hit the 50% ATR up here towards like 35 to 40? It definitely is. Let's see. I want to see if it's cheap enough. If I went to 67.40, let's do a call fly here. Butterfly call fly. 50% ATR gettable at 37. So if it's at 35 or 40, so I want to make sure it's cheap enough if I like the trade. So it's a $1.25. I mean, I should be able to get that to maybe a 50% return if I go 10 wide. Risk $1.40. Hopefully I can get price there to get into that window. Is price already moving? Son of a biscuit. Let's see. I'm going to try to take this trade for a $1.30. Okay, I'm going to go $1.35, see if this fills. This is a double up trade. Son of a biscuit. This thing's just screaming. Damn it. All right, I'm gonna pull back on it. I'm not gonna chase this higher. Shoot. Off we go. Well, there's your bull put spread. Bull put spread's pain. Butterfly. Now that this like cleaned up and you've got all the gamma up here plus the 50% ATR, I do like that butterfly trap. It's just something you want to manage pretty early. The unfortunate thing about this butterfly is it's so early in the trade, you're going to get like a small profit. Once it hits this price point, you really don't want to sit here and try to hold it all day. So if I took the trade right now for $1.40, and by the time price, if it hits my 50% ATR, if this is showing like $1.60 or $1.70, unfortunately, that's probably where I should take profit. And I hate doing that so early in the day. I'm not going to chase it. So anyway, I'm just not going to force. Be disciplined. But I think 67.38, 67.40 is very gettable on the day. 100% ATRs here at 76. I'm trying to sell the 80-85 zone. So we might surprise ourselves and get filled. If this heads up here, we might get filled on our bear call spreads and actually do just fine. The put 65.90. No, did I type those? It's a 6600 by 6595. 6590 by 60. Oh yeah, that's a 6585. There you go. Now it's correct. I just updated Telegram. Okay. And now we have, yep. So you can see that my gamma levels change here with my Tanuki Trade 0 DT. So now we got a 40 and 50 resistance level, and price is climbing up to them. Here's my, opening bell, a little bit higher. We've got 15, 20 minutes of direction. Again, not great for the standard daily profit play, especially when you look at the plus minus at 30 points. We're already up 25 points. That's why I've not been selling like those just outside of the money trades, because I feel like, we've got a lot more direction. I mean, the VIX at 18 is not some like, oh, that's like tiny volatility. That's freaking volatility. So paint me skeptical. I think the market just has the ability to move. So we're getting, straight direction this morning, and I'm going to try to get filled to a level I'm happy with. So I'm going, is it 80 by 90? Yep. So I'm going 80 by 90, 80 by 90 for $2, 85 by 95 for $2. Those are on the call sides. And then put side 6600 by 6695, 90 by 85. The reason that I'm willing to go 10 wide on the call side is because if the VIX is going to retreat, we shouldn't see aggressive upside pressure that puts us through the VIX box. We shouldn't. Okay. So we'll see. And with direction going this way, let's see what we have. I know these are low deltas, and they're still, this is so ridiculous. So a $2 credit is trading for 23 cents, 15 cents. So I'm still way off the trade. I probably need to see price get up to like 67.50 or 60. If it gets up to 67.50 or 67.60, I think there's a chance that we can get these things filled. All right, here's what I'm going to try to do. If we get a pullback, hear me out. I'd like to see price not go straight up to that 50% ATR. I'd like to see if we can go up, down a little bit, and then I can put in a butterfly spread at that 50%, because it would make it a little bit cheaper, and then hopefully it's able to get us some profit. You're starting to see that the 67.50 is also starting to thicken up a little bit as far as gamma. So if I don't get a pullback, I'm not going to take the trade. If it's already up to the 50%, it kind of cancels my trade. If I wanted something pseudo low risk, I can look at an iron butterfly. Let me see what that looks like. If I went 40, 40, 50, 50, or 10, I should say 10 wide, so 50 and 30. 840 to risk 150. If I think we can go a little bit higher, now I'm risking $1.40. This is a trade to be like skate where the puck is going. Pretty low risk. If we get a pullback first, this is good. If we get a pullback first, then it should make my butterfly spread a little bit cheaper. So if we get a little bit of a pullback, maybe putting in a butterfly spread here, or even an iron butterfly, see which one sets up for better reward to risk. Nice. Vivek says Iron Butterfly 67.45, 15 wide, 13.10 credit out 11.95. Good, man. Good trade. All right. So the two key levels I'm seeing this morning, right at the 50% ATR or the 67.50. This is about 67.38 and 67.50. If you're doing bull put spreads at the open, you've already had a pretty good run to start taking some profit, in my opinion. I mean, I know it's short and sweet, but in and out within 25, 30 minutes is never a bad thing. So 40. So 840, 835. Like this to offer just a tiny bit more profit. So I'm gonna hang out for a second. If this comes down, here's what I'll monitor. If this pulls back a little bit, then I'll probably throw in a butterfly spread here that hopefully is less than $1 debit. And if I can get $1 debit that offers me like $9 of profit, I think I can, try to double that. But I've got to wait. Or look at an iron butterfly that offers, $9 of credit, and I kind of put the same trade on. Same idea with reward to risk. Okay, let's see what else is going on for the day. Gold. Did anybody jump right back into gold? Got to ask, you've been tracking this stuff. We just hit the 21-day moving average yesterday on gold. It's up a little bit today. I do think that we might just revisit the highs and stall. I don't know if gold's going to run. I don't think it's going to run, but having a little bit of a pullback here. Okay, so it wouldn't surprise me if we either see a high, low, lower high, lower low, and there's more buying opportunities here on gold, or we see a high, low, equal high, and we just get a range trade going. Maybe it's horizontal, maybe it's a slight broadening pattern, but big rip up, consolidation, maybe at these highs. Sideways probably isn't too bad, but I am in. I got to pull back around the 21 and the 50 period. So 50 period, I'm still waiting for the 200 period. Ultimately on gold, I still think we're going to hit the 200 period. I said this yesterday on my final hour session. We are 500 plus bars from the daily 200 EMA. That is a long, long, long stretch. The longest stretch we've had since 2009 to 2011 when gold ran 600 bars and then crashed about 30%. So, as much as you might want to cheer this thing on to go higher highs, you may want to ask for some pullbacks first. Because to me, the more sustainable run is get the pullbacks and satisfy this dynamic support. And then longer term, this thing can build out a much bigger base and go higher. So I mentioned this. Stock markets tend to go V bottom and then rounded tops. Commodities tend to go rounded bottoms and V tops. It's very different behavior. So when gold is accumulating, when they run high, it's like they run high and then it's just like a nasty turn. So this is one of those nasty turns, high, low, lower, high, lower, low. I mean, I hope we pull back. I want to get some dollar cost averages. And I'm also not super concerned with like, oh, what about a stop loss? I'm just going to hang into these. Like these are medium, long-term trades. So I'm just getting more of I'm going to start dollar cost averaging back into gold and silver. Silver, same thing. Pulled back to the 21 period. I'd love to see this kind of do the same thing. High, low, lower, high, lower, low. Let's pull back a little bit deeper. Start dollar cost averaging. If it goes right back up to the highs again, maybe a fake out, maybe broadening pattern, some sideways. I think it does this rally good to go at least sideways for a little bit. Okay, I'm going to take a look at something really quickly. So I have a positive gamma around 67. I've got a gamma at 66.90. I think I'm going to split the difference, go 95, and see if I can do an iron butterfly there. So 66.95. here. See what it is for like a 15 wide. So 95 to 80. So I get 1350 for that. If we're going to settle in between my two positive negative gammas, like that offers $500 a profit. That's not too shabby. And then I'll try to get something on the upside if it's cheap enough. Let me see. I'm going to try to get 1370. This would be a small risk. All right, I just got filled. So I'm going to put this trade out there. Technically, this would be for double ups, but I'll make it. I'll put it in the chat. So bear with me. This is going to be officially for double ups. Diana, double up, new trade, SPX, 1023 expiration. Sell the 66.95. Buy the 67.10. Sell the 66.95. Buy the 66.80. 1370. Credit. This is an iron butterfly. Looking 130 max risk. Looking for a debit of, let's say, 1240 or lower for 100% return on risk or better. Okay. So I'm going to be in that trade here. That's officially going out for double up. I'll post this for everybody in the chat. That's the trade I just took. Okay. So the other trade would be maybe looking up into the 40. So maybe the 40, still about the same price. Recent highs at 50. This might be a little bit cheaper. Maybe 45 is a little bit cheaper. So that cost me $1.20 to make 8 and change. I'm going to see if this can get a little bit cheaper. Obviously, I can go 5 wide here, but then it's so tight. I mean, it doesn't cost me a lot of money, that's for sure, but it's so tight. It's tough to get like the big profit out of this unless it's end of the day. And that's a tiny little net. A 5 wide net is so difficult to hit. 10 wide, you got a fighting chance. But I like this debit to be under $1. So I'll go with the trap right around my positive negative gamma. So right here, if we end up coming back to like 6,700 on my dynamic trends, back here towards 6,690. So somewhere in here for the day would be pretty ideal. We'll see where price goes for the day. So we've already seen a move of about 30 points. That was the plus minus on the day. So we opened a little bit higher. So 03 to 30. I mean, we've had a 27-point move on the day. Our market maker's going to do their job today. We will find out. Let's go chart alarm at 67. Okay, and that trade from that was from Tuesday, 21st. So the exit on this one, it cash settled around like $6, less than that actually. Um, Trying to think what the exit was. So 9.25 minus 535. Okay. Today's the 23rd. So in 15 wide, 13.70 credit. So it's $1.30 risk. See if we can pull this thing in for a little profit today. So if we come back down towards my gamma pivot, 6,700, 6,690, anything in that zone should offer some profit on this iron butterfly. Okay, I'll keep an eye on this one this morning. If I'm up like $50, I might just take it. Hopefully we can see more than that, but I'll keep an eye on this for P&L. All right, so we'll watch this. Keep an eye, keep an eye, keep an eye. Come on, right back to the pivot point would be great. Max profit if SPX finishes. That's correct, David. If it is like literally at 66.95 at the close today, that trade is worth 13.70. So I'll show you what that looks like in option strat just so you see it. So we'll build this out. We'll do a iron butterfly SPX for today's expiration. I put the pin at 95, so 95 call, 95 put, and then the call is 15 wide, so 67.10 and 80. There's my trade. So if we fall, let's say price falls into my profit trap. What's kind of nice about this trade is I'm only risking $130. You can see that I've got some small profit on it already. If price goes down a little bit more, I might see maybe a 50% profit. If we go to like 67.15 or so, 67.10, we might see some decent profit on the day. If we start coming down to like 6,700, I mean, in the next hour or so, it's like that's a pretty good chunk of profit. This is now. So we start getting inside the profit trap. It's pretty solid. And again, the left side and right side of this trade, we're getting a much wider profit potential than just the profit trap at the end of the day. So as time passes, the right side narrows, the left side narrows, and the profit will grow. So the way this thing works is you have, as time goes on, the right side narrows, the left side narrows, and the profit will grow. That's what time will help you get in this trade. Now, it makes it a little bit less forgiving as far as like the left and right side, but obviously you're getting like the massive profit potential. So as we go further in time, let's go to like 11 a.m. Okay. So if we're inside of my profit window, I should probably be at like 60-70% return on risk, somewhere in there, maybe more. If we're right at the 66.95 zone, I'm going to see over 100%. But again, that's in the next 50 minutes. So not now. If it's right now, we come down to my profit trap, then I should see some profit on it. So I'm up 30 bucks right now. But I mean, if I'm going to close it, I'd want to see probably 50 plus dollars. If I get this closer to, 100, that'd be great. But a quick 50 is not bad. I'll take 50 bucks and I'll be happy for a quick win on the day. But yeah, to get you to that max profit, let's go all the way out to the end of the day. So, like I said, as the time passes, the left side and the right side get closer to the actual profit trap. And as the left and right side shrink in, you can see that the center is starting to swell into profit. And then by 2 in the afternoon, you're getting a decent little hump in the middle. By 3 in the afternoon, that's where all the magic starts to happen. By 3:30, this thing is like time to manage all the crazy good stuff. Here's 3:30 in the afternoon. Okay. I mean, that potential is 4-1, 5-1 right there. And you still have a half hour to go. And then the craziness is just like in the next 10 minutes and the next 5 minutes and the next 5 minutes, all the way into the close. You can see the left and right side very narrow now within your 15 wide, but a massive surge in profit if you're in that trap. Right. But yeah, so ideally 66.95, that's your max profit. But that's at the end of the day, perfectly closing at 66.95. That's hard to get. So my winners are usually, in here. If I can see price by, noon, 1 o'clock in the afternoon inside my profit zone, or the right and left side have widened out enough where I can see some profit, I generally take that trade. Max profit will be the 1370 that I took in on the trade. Okay, I'm already up 50, 60 bucks. Let me see if I can get out of this thing. 70 bucks isn't bad. Let me see if I can close this thing down. Close, we're trading at, I'm going to try a $13 debit. We're at 1310. I'll try 13 bucks. If I can grab a quick 70 bucks, I'll take that for the day. $13.10. Yeah, we'll see. So now, if I want to get a little bit more creative with the day, I'll set this at $13. What I was thinking is, now that we've had a bit of a pullback, is it still possible that we go after the 50% ATR in here? Right? So 67.35 or 67.40. Now, again, I might be throwing a trade away. I might be throwing this entire trade away. But now it becomes a matter of managing the profit side of these trades. Okay. So if the day is going to be up, down, and then up again, well, obviously this iron butterfly is not going to be as good. So I may want to get something up here that's cost effective, that maybe gives me another opportunity for some profit. So can we hit, I'd say between like 40 and 50 today. I might split the difference and go 45 and see what this one looks like for an iron butterfly. Okay, we'll see. Let's go 45 to 60 to 30. So I sell by, so I'm getting 1260 out of this one, a bit more risk. If this was 1350, I'd probably take the trade. If I do just a call fly at 40, I mean, it cost me $1.25. I mean, that's not a lot of risk. 40. I mean, I think I need to have like the 45. Does this get a little bit cheaper here? 45. I go 10 wide. So $1. We'll try to take this trade for $1. Okay. All right. I was going to say I was going to change it to $1. Just got filled for $1.05. So now I'm going to replace this one down to a $12. I'm going to go 1170. So if I lose 105 in this one, I want to make 200 on the other one to try to net out some profit on the day. So go 1170 here. All right, another trade for double up, putting it in the alerts. I'll put it in the chat since we're talking about it here. SPX, double up new trade. SPX 1023 expiration. This one is a buy 67.35 call, sell 67.45 call, buy 67.55 call, 105 debit, 105 max risk, 895 max profit. Looking for price to find 67.40 to 67.45. I'll put 40 to 50 today, actually, based on 0DT gamma levels and 50% ATR up. Looking for net profit on the day between this call fly and the iron butterfly. Okay. So I'll put this in the chat. Okay. So now I have an iron butterfly that is right here at 95, and I have a call fly that's here at 45. So I have a 10 wide net up here, and I have a well, I guess it'd be technically 10 points, pin price, 10 points. So I've got a 20 wide net here, and I have a 30 wide net here. I should be able to get enough profit on this iron butterfly that I can probably close this out for profit. So if I'm going to see a partial loss here and a nice profit at that pivot point, that'd be pretty sweet. It was filled. When did I take it, Larry? We took that in the pinch point. That would have been issued the last time we did our live session. So 10/7 was when we put in the entry, and it got filled this morning. Okay. So here is a double up call fly. So iron fly, call fly. So the way this, I mean, right now you can see that, okay, this trade is down about 20 bucks. This trade is up about 70 bucks. I could still take partial profit on the day and walk away with a winner, and I'd be totally fine with that. If the net on the day could be like 70, 80, maybe even $100, I think I'm just going to take the profit. Okay. I don't need to be greedy. It's like 70 bucks a day, 80 bucks a day, 100 bucks a day. I'm happy with that for 0DT. Okay, so there's my debit side for the iron butterfly. And then let me put in, I guess I'll put a order to close this one. So if we did like a I'll put a $3 credit. I'll just put it out there so I can monitor both. So I have one trading for 13, 12.90, one trading for 86. So net on the day, I'm just looking for, realized gain. If price is falling to 95, I'm really curious where that's at profit wise. If we fall to 95. Because I might sacrifice a little bit more on the butterfly call spread, but if I can get a quick like $90 to $100 here, maybe lose less than 20 or 30 here, I'll just take the winner. It's right now $12.95 on the iron butterfly, down about 20 bucks here. Price is 67. We're getting closer. Okay, this is good. All right, let me see if I can sneak out of this thing for 1290, 1285, 1275. That's good. Let's go 12, maybe 1280. That'd be 90 bucks on this trade. Okay, price is bouncing just off of that level for right now. Okay, we're right back where we started. Open the day, right back where we started. Standard daily profit play going up, down. This is perfectly centered, so you should be good on a daily profit play if you just did the standard iron condor. I'm looking obviously a little bit more creative on the day for less risk. See if this thing will float us into profit. Okay, I'm going to bump this down to 1270. See if I can sneak $100 out of this thing. So watching between these two to get a net profit. All right, we'll keep an eye on it. All right. I'm just thinking of the schedule for the rest of the week. I'm going to talk about some double ups or some daily profit play. Tomorrow, let me see if I can put this in for tomorrow. So tomorrow at 1 p.m. Tomorrow at 1 p.m., I'd like to do a masterclass for my daily profit play. So we'll go daily profit play masterclass. I'm seeing your question there, Greg. So does it make sense to go 5 wide on the call side, 10 wide? Not necessarily. And the reason why is because if we see a spike in VIX, the floor is not safe. If we see a VIX that, obviously the VIX isn't going up today, but if the VIX is going, the VIX is at 18.5, it's like that's still a pretty solid high VIX. Yes, we had a 29 to 17 crush, but it's like the VIX, like yesterday, the VIX jumped from 18 to 21. The floor isn't safe. So if I went 10 wide put, I'm taking on a lot more risk. If I go 5 wide put, it's contained. I'm just trying to manage risk on the downside. Okay. So I'm going to go, so masterclass tomorrow. So daily profit play, masterclass, Friday, 1 p.m. Eastern time for members. Okay. So if you'd like to be a part of this, and here's what we're going to talk about. We'll talk about the standard daily profit play. We'll talk about the daily profit play indicator. We'll talk about, daily leveling, reward to risk, probabilities, and also the probabilities. I spell here. And the, defense levels. And trade size. So we'll cover all this tomorrow in class. Okay, we usually have some pretty busy master classes in daily profit play. First and foremost, I want every daily profit play masterclass to start out with, if everyone that comes in, current students, the original students from last year to new students, There is a standard daily profit play that we can do every single day, regardless of what you think the market's going to do. You just align yourself with the market makers and trade, trade, trade. That is as simple as I can make it. So every single day, I'm sitting here using some VIX discretion. I'm using some this. And look, I like to trade Mondays and Wednesdays primarily because that's what I've shown is the highest win rate. Mondays and Wednesdays, 95% winners. Monday, Tuesday, Wednesday, Thursday, Friday, every single day, 91% winners. Okay. But what I am very picky about is I don't accept a mediocre credit. I need to know that my reward and risk is going to make enough sense where if I'm winning 90% of my trades, I'm still going to walk away nicely positive over the course of 50 trades or 100 trades or thousands of trades. Okay. So I'd love to have as many new students coming in as possible. So I want to talk about that here in a few minutes. But look, I have over 900 students. We started at 0. We have over 900 students. We make money. Model portfolio is up over 75K with $1,000 risk. Okay. You're cutting that in half. I mean, if I'm taking like a $400 risk or $500 risk, I'm cutting that in half. It's still some pretty good substantial profit for the year. Okay. But there's a lot to unpack here. If I have anybody that is new, okay, if I have anybody that's new to trading options, Deanna and I talked about this earlier this week. I want to provide some really good prerequisite education. I think one thing I've noticed with Prosperity Pub, a lot of the course offers you have is there's not a lot of great prerequisite education. I take a lot of pride in making sure that when you come to my trading sessions, either one, I am preparing you and teaching you during master classes, or I'm providing the proper education to make sure that you understand what on earth we are doing. And then you are comfortable when it comes to actually trading live with me, that we can find our calls and find our puts and put on our trades. We understand our debits and credits. So I do have some prerequisite education that I think would be very important and helpful to watch. And a masterclass like tomorrow would be very helpful to get prepared. And then we're ready to trade on Monday. Okay. So the one thing I do say is one really important prerequisite for you, all of you, is I want you to be comfortable and confident navigating your broker platform. Finding your calls, finding your puts. If you put on a trade, you can find it. You can manage it, open to close. If you are not comfortable doing that, you need to find some videos on your broker, go into their learning platform. A lot of them have educational videos on YouTube or educational videos inside their broker platform, somewhere to guide you to open, manage, watch your trades. How do you track your trades during a live trade? Okay. And the reason why is because when we trade daily profit play, it is a 0-day environment. It's fairly quick. It's pretty time sensitive. It's pretty price sensitive. So we don't want to hit a fat finger and push the wrong button. We don't want to enter for a debit when we should be entering for a credit. We don't want to be closing for the opposite order at the wrong level, right? Like all these things matter. And that's just coming back to, are you comfortable navigating your broker platform and navigating your trade? Does that make sense? So if I can get big Y's and yeses in the chat of yes, I know that if I am still struggling to navigate my broker platform, I should spend some time doing that. Literally 5-10 minutes. Finding those videos on your broker platform. You look at YouTube. Who's your broker? Is it Tasty Trade? They do demos and tutorials all the time. Okay, they're on. There's YouTube videos galore. Thinkorswim, Schwab. Schwab has a web platform. Schwab has Thinkorswim in the desktop and the web platform. Webull, Robinhood, Interactive Brokers, all of them. E-Trade, Fidelity, all of them. They all have videos. So when you're comfortable navigating this stuff, it does make life a lot easier when I'm, moving at the pace. I'm not going to say it's extremely fast, but when I'm willing to get into a trade for the first, few minutes of the day, I want you to be able to take that trade with me. So when I post it in Telegram, within about 30 seconds of me placing the trade myself, you can take the trade right along with me. Okay. So, but again, that's the requirement for like a 0-day. 0 days are fast. It's price sensitive. It's time sensitive. A lot of my other services are not. A lot of my other services here. Let me get this out of the way. So waterfall income, not time sensitive. We get into these trades every Monday. We've got the entire day to take them. We have the entire week to take them. You can take waterfall income literally anytime you want. The trades are that good, and I rely on them, and I believe in them that much. We can take these trades whenever we want. Okay, newsbreakers. We had a lot of trades posted this week in newsbreakers. We had 3 or 4 live trades, and we had like 10 plus pending orders. all based on good technicals, all based on good reward to risk. Double ups took the trades this morning. These are a lot of 0-day trades, 0 and 1 day trades. So pretty time sensitive as well, as far as how I manage these trades. Pinch point, not time sensitive. A lot of these trades are taken in with good reward to risk setups, and it's a swing trade for 60 to 90 days. I'd say 90+% of our trades that we've had closed for pinch point, we have an 85% win rate on pinch point. Most of these trades have closed out with an automatic take profit. So we get filled, take profit is set, and the broker closes out automatically. This week, we had a winner on VRT for a 50% return on risk, and broker automatically closed me out, which was sweet. Okay, Crash Insurance Masterclass, not super time sensitive, but they are trades that I take for like a 3 to 6 month trade. It's a hedge. So usually these are like leveraged hedges where I risk maybe $200 to $500 to make $10,000 to $20,000. And that's not an exaggeration. They're low probability trades, but they pay out a monster profit if we need it. And you'll be thankful that you can get that type of leverage, because obviously if we're going down in the market, we want to have a lot of profit potential to mask and protect our portfolio. Okay, Project Options Edge. This is my kind of whatever it takes kitchen sink discretionary service. What this is I take whatever I want. I can do butterflies, iron butterflies, ratio spreads, naked puts, campaign trades. I can buy shares, trade options around it. Like, this is probably my more like intensive class and service that, again, if I'm going to say there's a prerequisite, it would be you're very comfortable managing capital. You're very comfortable managing your portfolio. All right. So what I'm doing here is I'm putting in, if you upgrade to lifetime of any of my services, then I'm giving you a full course in practical options. I sell this course on my own, on demand, for $497. And I built it specifically for my nephews, who are now about to be 21 and is 17. So I've got a 20-year-old and 17-year-old nephew. I built this for them over a year ago. And the reason why is I'm like, look, I know that, college kids don't have a lot of money. I get it. But if there is any, Christmas money, any excess student loan money, any whatever, I mean, I found a way to survive during college. Internships, I mean, I'd make 20, 25 grand in an internship for a 3 to 6 month window. I would just work my butt off, and then I come back and it all goes to college. But I did have some excess. I obviously paid for rent and stuff like that, and I survived. But whatever excess I had, if I was smart enough to be investing, which I mean, I was fortunate that I was, because I had an older brother that said, hey, open up this when you're 18. That was a Roth IRA back when I was 18. So I did invest when I was a kid, not really know what I'm doing, but this is my point. If I can educate them who know nothing about trading and set them up for some type of knowledge in the future, they were able to grasp it. Understanding that options come with all sorts of weird terms and vocabulary, and you're trading against time. You're trading against this. What do these Greeks mean? What about debits and credits? I get it's all confusing. Practical options is, let's take away all that confusing stuff. Let's take away the fancy names and the fancy strategy names, and let's focus on what are we actually doing with this trade. Because if I'm going to sell a put, what does that mean? If price is here, what does that mean? Am I making money? Am I losing money? Right? If I do a spread trade, what does that mean? What's my risk? What's my reward? What's my probability? Literally, every trade you take in options, you should know this stuff before you ever place a trade. You should know your probability of profit. You should know your reward and risk before you ever place a trade. We know this stuff every single day. Okay. So my point is, any of these classes, if you upgrade to lifetime, you will get the full course. If you want to add practical options, it is $27. That's a quick course, $27. And that's going to get you started on buying calls and buying puts, best practices, bullish spreads, and bearish spreads. Get you familiar. Okay. Full course, I actually navigate 4 or 5 different option platforms, going through the chains, showing you a risk graph, going through key terms. This one has a 70-page PDF. This one has a 30-page PDF. Okay. So I brought in prerequisite education for this reason. Okay. I want people to understand that options is a fantastic tool to trade. It was created in 1973 and it changed everything about trading the markets. And now 50 plus years later, it is literally 50, 60, even sometimes up to 70% of all daily volume is in options. And it is layer upon layer upon layer of derivatives. And it is so big and so important, it will move the market. Okay. So option flows matter. Be able to hedge, trade the markets up, down, sideways for a fraction of the cost. Options can do this. Speculate, leverage, high reward to risk, high percentage of profit. Options matter. It's a brilliant layer upon did you did you know that we have 4,000 publicly traded companies. We have more ETFs right now available than publicly traded companies. So we have like layer upon layer upon layer. ETFs are just baskets of stuff. And then on top of that, we have leverage on top of that. Oh, a double leverage this, a triple leverage this. We have 5x leverage stuff now. And you throw options on most of those, right? So there's a lot of fluff in the markets, but you can also trade options where it's all defined. We shouldn't ever have to risk more than we're comfortable. You know that stuff going into every trade. Okay. All right. Diamond Club members, yes. If you're a Diamond member, if you're an All Access member, you have the full course. Yep. And you can have both. You can have both. What we're doing is we're taking practical options and we're putting it in as a standalone course. So it's not just in one class. It's going to be practical options. You can search for it in one-click trading. I don't think that's officially done yet. Gianna and I just talked about it this week. But I want this to be available for a prerequisite where you have it as a classroom. It's its own access point. You have a PDF. You had videos. And I want to be able to provide this. So like I said, if you upgrade to any of my classes, okay, any of my classes, lifetime upgrade to any of the classes, I will give you the full course, which I sell for $497. If you want the quick guide, it's $27. If you want to get into it by just buying one of my classes, that's totally fine. I don't care what our team does with it. I'm saying I built this for my nephews. Anybody that's asked me, Chris, I hear you talk about options, but I want to learn how to trade options. I literally send them these links. I'm like, look, even if you just watched one video and it just piques your interest for $27, nobody has buyer's remorse. And you learn something that's like, that makes a lot of sense. I never thought you could trade that way. Right. Like I bought a motorcycle a couple weeks ago and the kid that I was spending time with was probably in his mid-20s. And he's like, oh yeah, buddy of mine, we used to trade. It was kind of back in 2020 when things were crazy. And just like typical bull market genius stories, it's like they made a lot of money in 2020. They gave it all back in the end of 2021 into 2022. And he hasn't traded since. It's like, I couldn't imagine getting interested in trading and then giving up. It's like, if you're going to do this, it's not something you want to give up on. I don't think, because it's too good. I think I took a screenshot of this. This is crazy. I know I'm going way late in time. I'm not presenting anything. I don't care. Look. Time is your best friend in the market. Let me see if I can find this screenshot. If I don't, I know where to find it. Got all these adorable pictures of my kid. If not, all right, I'll find it. It's right here. It was I think it was Peter Maluk. Okay. It's in here somewhere. Here it is. Let me just find this guy. Bad year for stock pickers. Started 2025. Maybe he didn't post it. Crap. Anyway, the summary of it was basically nobody needs to focus on timing the market. You need to focus on time in the market. The difference between, $10,000 invest in the S&P 10 years ago, 20 years ago, 30 years ago, 40 years ago, 50 years ago, 60 years ago, 70 years ago. I mean, it's astronomical. I want to say from like 1950 or 1960 to now, $10,000 is worth over $4.5 million. You never had to time the market. You just put $10,000 in and it freaking compounded, 400 times your money. So I thought it was this guy that posted it. Maybe it was Charlie Blubble. Anyway, time in the market is ultimately your best friend. But I get it. Not everyone's going to have the next 30, 40 years of time in the market. So, we trade 0DT. That's not time in the market. That's timing. There's a balance. But for the big picture, it's not timing. Play the game, trust the inherent bias. The market tries to go up as long as it possibly can. It's built to go that way. It's gamified to go that way. Be bullish in the market. Your long-term portfolio will thank you for it. But adding a layer of income trading, adding a layer of protection with options can go a long way. Right? It goes a long ways. Okay. All right. Let me get some questions here. I saw this stuff started to blow up a little bit. Davis is up $250. Have to go play number 4 at Pinehurst. Okay, not bad. Let's see here. Quick guide. Yep. So we'll get those into one-click trading, multiple services at this point. Only using Chris Pulver services because he's taught me so much about managing risk, defining your risk. Bill, that's super kind of you. Thanks for saying that. Manage your risk, define your risk before you make the trade. Very important stuff there. Can someone post a link to Chris's trading services? Yeah, Gloria, my website will show that stuff, chrispulvertrading.com. I'll post that in the chat here in just a moment. I need to get these into prerequisite learning immediately because I've been massively losing. Okay. Yeah, let's get you that. So, Deanna, hopefully this is kind of the urgency we need. I think we clearly see there's demand for it. So let's get these into one-click trading as separate classes. We can get people tagged. So if you have a class of mine, you can get practical options. If you don't have a class you want, look, here's how you can start. If you want the quick guide, here's $27. You can buy it on my on-demand page. Okay. If you buy something with my services where you can trade with me and get the alerts and actually be in one of my Prosperity Pub services, that's fine. If you just want to get started here, it's a low pressure, low price point, $27, get you started, get your feet wet, get more comfortable learning about options. Here it is. Okay. There it is. Okay. What else? prosperitypub.com/premium services. Yep. You can also go to my website, chrispulvertrading.com, and you can get some more information on each one of these, daily profit play and double ups. I mean, all of them, right? Newsbreakers, pinch point, waterfall. So most of my core classes there. chrispulvertrading.com. All right. What else? Looks like David and Greg are going to tee it up today. Nice. I'm jealous that that's good weather to play. I'm trying to get in the last couple weeks of some motorcycle rides if I can, since it's like 50 degrees is the high for the day. But it's fine. Heated seats, heated handlebars make a difference. It's fun to take a cruise every now and then. All right, good stuff. So look, I know I didn't officially walk through daily profit play today, but here's what I will say. I do this stuff every single day. Daily profit play. We talk through it. Members get the alerts. I've got pending orders in still today. They're still pending. I'm still going to take them just like yesterday. I set the levels that I wanted. I set the strikes that I wanted. We got filled. We got profit. So I know the trades that I placed today for daily profit play are good trades. There is a chance they don't get filled. That is okay, right? Sometimes a no trade day is better than forcing a trade. So what I'm audibling for today is, if you're in a football, if you're familiar with the football analogy, it's like I audible and pivot to something else. I did a double up trade today, and that's why I'm focused on a couple of pin levels, either 66.95 or 67.40 or 67.50. I'm going to try to pin some of those levels and get some of those to pay me later in the day. If price is there, I should have some good profit potential to manage something net positive. There you go. 80-degree day last week. Bodine, where you at, man? 150 miles is sweet. I just got a big fat tune-up on my. Let me see if I can find a picture of it. This is like the bike. This is the Dark Horse. I don't have this on it. So I don't have the, I don't have the kind of fancy backrest. I do have a two-seater with a backrest. It just looks different. So I don't have this. I also have extra dressing here on the side to cover the legs. I do have the dark screen or the dark tint windshield. I just got a tune up on it yesterday called a Lloyd's tune. I had no idea what it was, but it beefed up the horsepower. And this bike, it's ridiculous. It's such a fun bike. So it's a luxury ride, that's for sure. I'm having some fun with it. So I will, by forcing myself, I'm just going to ride it as much as I can until the snow flies. Vulcan 1600, cool, man. I had a Vulcan back in the day. My dad had a Honda Shadow 1100 out of Vulcan. This is like my 8th bike. I've had a lot. I've had Hayabusas. I had a Rocket 3 from Triumph. I had a Thunderbird Storm. Yeah, I've had a couple Hayabusas. The Indian's been a lot of fun. So there's a couple dealerships out here that have, they just have awesome bikes. So yeah, it's been pretty sweet. It's been fun. My fiance loves it. If she heard me upstairs, she's probably rolling her eyes. Anyway, good stuff. All right, in Dayton, gotcha. North of Columbus, cool. Oh yeah, in Ohio, nice. Wear a helmet, yes, obviously. Yeah, I've got the bulletproof jacket type stuff, the Kevlar, the elbow pads, knee pads, double up on the denim. All right, anyway, we digress. So I'm not going to go into an official, talk. What I will say is for Daily Profit Play, I'm going to do a masterclass tomorrow at 1 p.m. Okay. The link, I'll find the deck right here. So here's the link. If you want to get into Daily Profit Play to get into tomorrow's masterclass, prosperitybub.com/100. Okay. That'll take you to the page. Look, this is the session that you come in, you trade with me live every single day. Yes, we have the Daily Profit Plan that is free for people to, just get to know me. But obviously I'm talking about Daily Profit Play, posting trades for members. I'm posting trades for Pinch Point. I'm managing trades. I'm looking at positions. I'm talking a little bit of everything in the mornings, right? There's the value of my morning sessions. But if you want to actually trade with me, get those trades posted every single day, we're active in Daily Profit Play, prosperitybub.com/100. Okay. Link for trading tomorrow. I'll show you exactly where you can get it. Go into your one-click trading, go into the classroom, and I'll get logged in here. Just give me a moment. So the link, we'll send an email out as a reminder, but you can go into your classroom, and anytime I'm live, I do use the same masterclass link. So once you're in your classroom area, go to Daily Profit Play, and you can click on the masterclass and training section. So we have trade rooms, daily live sessions, and we have masterclass recordings. Why did this get changed? Hang on one second. Trade rooms, daily live sessions. That's every day, Daily Profit Play. How'd this get changed? Gianna, help me out. Where's my masterclass link for tomorrow? So this is my Daily Profit Plan room. Masterclass recordings, I thought would be the link. These are all archived classes. Son of a bee. Well, there's customer service. I was looking for the Zoom link in here. Get alerts. Get started. Alerts. There. Okay, there you go. I guess that helps. Join members training. So this will go out when we go do it through a masterclass. Okay. So I'll show that again. So go into Daily Profit Play. So search for it, Daily Profit Play. Click on the alert section in your membership area, and then we will have a reminder right before class. So Friday,
1 p.m.
1 p.m. Eastern time. Yep. So Daily Profit Play Masterclass. So that email reminder goes out. Check your alert section, and that'll be the link to join me in Zoom. So it's going to be a Zoom link. All members welcome. Okay. And like I said, we'll cover a lot tomorrow. We'll probably go for 60 to 90 minutes. I want to make sure that we leave with the core strategy, and we're talking probabilities. We're talking Daily Profit Play indicator. Like literally every single day, if I didn't have my daily profit play indicator, if I didn't have my gamma levels, if I didn't have, the mechanics of like selling premium, I wouldn't do this trade. Like I wouldn't trade daily. Okay. I think trading daily it's not easy, and what it all comes back to is you have to find some type of edge. Here's my edge in daily profit play. We trade alongside market makers. They get paid every day to provide guardrails for the market that prices should stay within those reasonable levels. In the rare event, probably 1 out of 10 times, the market might push higher for the day or push lower for the day. And market makers, what they do is they roll that risk for the next day. And they typically see anytime we see like the markets, oh my God, it went way above where we thought or went way below where we thought. It sucks when it happens. We always have managed risk for that reason, and we typically win the next day. In fact, when I ran the numbers for 3 years of 0-day trading, the biggest losing streak we had was 2 days in a row. And after that, you put together streaks of 12 in a row, 15 in a row, 25 in a row. We had a win streak of over 50 trades in a row, winning. Okay. So this is a process where risk is really important. Never over risk. Okay. Because a loss is never fun. It's annoying. We shouldn't lose. We shouldn't lose. I'll put it that way. We shouldn't lose. Okay. In the event that we do lose, know that you've got to trade through it and know there's winners right around the corner. So do not get discouraged from taking a losing day, because the next day or the next day or the next day, the next day, all winners. All right. It's really important that you have to understand, like, we are doing slightly smaller rewards and larger risks, but it's always known ahead of time. And we just follow the process, follow the mechanics, and trade through it. The markets can be crazy, but market makers, it is their mandate, it is their job to guardrail the market. And they do it all the time for every asset, for every expiration. So a 0-day environment is just as important as a weekly. It's just as important as a monthly, as a quarterly, as a yearly. And most of the time, they're not wrong. Because when they start to get pushing the thresholds of those highs and lows, they tend to let them react. So there's ceilings and there's floors in the market. Okay. And we see it. We see this stuff almost every single day. Okay. Is Chris posting to everyone? Did I see what was the last post? I did. So I did the on-demand page for quick options, and I did the chrispulvertraining.com. Those were to everybody. Yep. Okay. Do call a win based on net profit. Is that a question? I'm not sure what that question is. Do call a win based on net profit. Yeah, my goal is if I take a trade for the day, I want to win the day. So if I'm in one trade for the day, we win. I win the day. I don't trade. Like, that's it. Daily profit play, win the day. In the event that I take 2 trades, 3 trades, I'm still trying to win the day. Like, 0-day trading to me is about winning the day. Sometimes it's messy. Sometimes I might have to take 2 or 3 trades to win the day. I don't love to do that. I like to take 1 trade and win the day. So typically what we have happen is, here's price, right? Here's price. We put in our daily profit play. And if price does what it does for the day, it doesn't really matter. As long as we are aligned with market makers and they do their job, we win. That's what happens. Right? Price can go up for the day. Price can go down for the day. Price can even go up through our levels and still come back and win. They can go down through our levels and come back and win. We still win. Yesterday would have been that day. Yesterday, the day did this. We started out here. If you did a high and low, price actually went down through our lows and came back above it. You still won the day. So how do you not freak out when this happens? You don't over risk. You don't over leverage. You know that your defined risk is already there. And the market did a crazy thing. It was down like 70, 80 points for the day, and it came back and closed out at minus, plus or minus 30, 34, which was within what we expected. Okay. So that is a win the day. All right. There we go. Results of all the day's trading profits. For the service, yeah. I'm not over trading here, man. Like, I'm talking about taking like 1 trade a day. That's daily profit play. Like mechanically, I focus on one trade for the day. So what do I have right now? I don't have any daily profit play orders that are in. They're pending. Okay. So pending, 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 pending. Not a single one filled. If they get filled, the probability of profit on these is probably 90+%. So if we get filled, we should win. If we don't get filled, okay. I didn't force a trade today, and I'm okay doing that. All right. And so for the trades I did take, my double ups right here, okay, I'm looking to watch both of these for a net profit on the day. So that's going to be officially for my double up service. I posted it here in Telegram. If I win the day, it's based on one of those two trades. Hopefully give me enough profit to manage the risk on one, manage profit on the other, and win a net profit on the day. Whether that's a net profit of $50, net profit of $100, or I get, later in the day and it's all of a sudden a big fat profit trap of thousands of dollars. Cool. But I'll manage it. Okay. All right. So prosperitypub.com/100. Deanna, we could post that link. I know I didn't officially read the deck here. That's fine. I'll go through it again tomorrow. And okay, so we'll post the link. Daily profit play. So prosperitypub.com/100. If you're interested in, look, if any of these services stand out. And again, it's up to you. Like, there's no pressure for me. Look, what I want you to do more than anything is at least get a quick guide from me for $27. Get your feet wet with some option trading, be a little bit more familiar on following a broker platform, and then you're ready to trade some iron condors, reverse iron condors. You're ready to trade some bull call spreads. You're ready to trade some combo trades. You're ready to trade some butterflies. You're ready to trade some combo trades, right? You're ready to trade some hedges and futures or SPY or QQQ. You're ready to trade some ratio spreads and naked puts and buy some shares. All I did is I rattled off literally everything we do in these courses. If none of that made any sense, you need to start with some prerequisite education, which is what I have. I want to make sure that you are getting into a foundation that I want to teach you. I want you to learn so you can then earn. And you're not doing it blindly. You're not like 100% relying on me. It's like, I want you to know that whatever you want to express in the market, you can do that with options. If you want to be bullish on some crazy biotech, if you want to be crazy bullish on nuclear energy, if you want to be bullish on everything Trump tweets, right? I just saw that the government's going to take some stake in quantum computing. Well, what the hell does that mean? I don't know what stocks they are. But if you want to trade that stuff, you can trade that with options because it's always defined risk. Take a stab at it, right? I mean, if I went to a casino and I was going to sit at a poker table all night, I'd be playing for like dollar annies. Dollar bets. I can survive all night on that. But when you start swinging, it's $100 a hand, $200 a hand, it's like, that's not fun. That all of a sudden it's like you put emotions into that. So if I'm going to take a trade, I want it to be small and a loss is inconsequential. And I want to win most of my trades. It's like I'm playing this game to win, right? But I understand that I'm not right all the time. And when I do lose, it's nice to lose gracefully and not feel like, oh my gosh, I did something wrong. Because loss aversion is very real. If you lose and it hurts so bad emotionally, it hurts so bad financially, you will do a lot of things to never lose again, which pretty much means avoiding that strategy, avoiding ever trading that ticker again, avoiding. So it's not about avoiding. It's about taking a loss in stride and knowing that good wins are out there and good trades are right around the corner. Just be willing to keep trading. So it is a lot of survival, but that's why risk is so important. And, we have defined risk trades and all these things. All right. I'll let you go. Okay. So again, I know we didn't do an official, talk today on daily profit play, but I will teach the class tomorrow, 1 p.m. Eastern Time masterclass, prosperitypub.com/100. Check it out. If you want some prerequisite education, grab my quick guide. I'll post a link in the chat again if you want it. Okay. Like I said, if you are going to purchase a class from me, if you're going to purchase a class from me, and you upgrade to lifetime of this class, I will give you my full course, okay, which has everything in the quick guide with more, okay? And they're not the same videos. I did the videos all from scratch. So the quick guide is its own standalone video course. The full course includes walking through broker platforms, walking through key terminologies, walking through a much thicker PDF and strategy guide, and doing 13 of my favorite strategies. This one is essentially 6. It's buy calls, buy puts, bullish spreads, bearish spreads. So it's about 6 strategies. This one is 13. Okay, with a lot more substance. So a lifetime upgrade will get you the full course. If you want to start out and get your feet wet for 27 bucks, there's a quick guide. And I'm here to help. You know, I don't just, you know, I don't just talk. It's like I'm trading right alongside you. All of my services, they're all live trades. Everything I take in my services, they're all real, right? So I care about winning because I want to be right and I want to make money. And if I'm wrong, I can take it in stride knowing that my risk is small. And it always has to be small, because if I was emotional in every trade that I win and lost, I'd be a wreck. My hair would be a lot more gray. Okay. But I'm still hanging on to some color. It's getting gray. Anyway, all right, I'll let you go for today. I'll see you tomorrow morning. I'll be back tomorrow or this afternoon for my final hour session. We'll be back tomorrow morning for daily profit plan. Friday fast money. We'll see what we get. We'll see how the day finishes. I'll come back for my YouTube session this afternoon and see how the day closes. Let's watch our levels. Okay, I do know that if I'm getting price up here towards 45 or here towards 95, obviously the dead zone is not where I want it to be. It's like this pays a lot of money. This pays a lot of money. This is kind of a dead zone. So I don't really want to force another trade. I'm thinking that with this 50% level, we're seeing this gamma level kind of light up around 50. So maybe we get into that level and I get a profit trap. The later in the day, the better, because that starts to shift my butterfly profit into the center, right? So right now my butterfly P&L looks like this. But as the day goes on, it gets narrower and higher, narrower and higher. And eventually, towards the end of the day, there's where all the magic is, the final 30 minutes. So if I'm anywhere near these areas, I should have some profit to work with. Okay. 495. Yep. That's my practical options full course. I'll post that if you want it. So if you just want, my practical options full course, there's a link. And that is 13 option strategies with, navigate. I think I did like 4 or 5 broker platforms, went through risk graphs, talked through key terms, walked through a 70-page strategy guide, and then got into 13 of my favorite option strategies. So I think this is, and I built this literally for my nephews that know nothing about trading, but I know that also I built that in mind where it's like, if I can teach them the basics of trading options and they can both say like, that makes a lot of sense, I like this, then I think I can teach anybody. Okay. I've also given this to literally anyone that asked me, I hear you trade options, how would you get started? This is how I get started. Okay. How did I learn how to trade options? I explored the stuff myself, and it was, a couple educational courses, trial and error in the markets, figuring it out. And it took me years and years to put this all together to where I'm at now. So I kind of had that in mind where it's like, I don't think anybody should have to take years and years and years of market tuition and market experience, when if you understand risk and reward and understand what this trade actually means when you put it in the broker platform, let's do that in a month. Let's do that in weeks. Like, let's get the education down pat in a couple weeks. Let's learn and earn as we go. And it's something that we can actually apply. That's why I call it practical options. Take away the silly names, take away the stupid vocabulary, take away the stuff that confuses people. When you want to sound really smart, talk about options. But what is it at its core? It's practical options. So, all right.